It's 1:30 p.m. in Lagos, 12:30 p.m. in London and in Accra, Ghana. We're bringing you markets analysis and insights on Business Incorporated live from Channels TV and Lagos. And here's what's coming up on the program. IMF reaches deal with Kenya to raise current financing by $938 million. South Africa fines Standard Chartered 43 million rand for currency manipulation. And Zimbabwe Stock Exchange okays companies to prepare financial statements in US dollars. Hello and welcome to the program. I'm Will Ibang. Let's kick up with the markets, shall we? First up, major equities in Africa. At intraday, major equities were trading mostly positive. Now let's see, Nigeria's NGX was up 0.09%. South Africa, however, was on the downside, same as yesterday, with a massive 2% yesterday. Today is a 1.2% at intraday. Now in Egypt, let's see how the EGX 30 performed. It was up 0.76%, while Kenya closed Wednesday's session in the green 2 straight days in a row now. Now let's go over to the Middle East, shall we? We'll see it's positive at intraday, all green. Abu Dhabi, 0.1%, up at intraday. Dubai, on the other side, was also up 0.48%. Elsewhere, we see Saudi and Qatari indexes also doing well at intraday. Now in the UK, the Train Drivers Union, ASLEF, says it will stage a series of one-day strikes and call an overtime ban across England's operating companies at the start of December. Now let's bring in Juliana in London for the latest on this. Juliana, good afternoon. I guess it may be a bumpy Christmas ride. What is behind this latest announcement?
Good afternoon. Well, bumpy indeed, and it's pretty unfortunate actually, because this ongoing dispute between ASLEF Union and the Ministry of Transport here in the United Kingdom has been going on for some time now. In fact, I believe RMT Union, which is another huge union, a union that I'm sure all of our viewers in the UK will be familiar with because they, of course, oversee tube drivers. They have actually managed to broker a deal with their bosses, but alas, ASLEF are still in this really bitter dispute with the Transport Secretary. Now, this is all about the same things that we've been discussing over the past year: pay, jobs and conditions. I don't believe members of the ASLEF union have actually received a pay rise since 2019. Pre-pandemic. Of course, since that time, the cost of living crisis in this country has increased dramatically, and they want their just desserts. You know, they think it's a really difficult job, and they want to be paid what they deserve. So they have announced a series of striking dates, I believe 8 in total, between the 2nd of December and about the 10th. During that period, they're also not going to be accepting any overtime, because that's one of the issues within the dispute. Lots of drivers have been doing overtime. They're not getting paid more for this overtime. So there'll be a complete ban at that time. And, you know, they were pretty clear in their statement that they're doing this to wreak havoc on Britain's rail lines, and they believe that that perhaps is the only way that the Transport Secretary, Mark Harper, is going to listen to the demands. They've accused him of being asleep at the wheel. So like I said, the winter of discontent has now been pushed into 2023. RMT Union completely satisfied, but ASLEF, so far, they have agreed terms with 14 rail companies in the UK, including Eurostar. But there are 16 train operating firms that they are still to negotiate with, which is why we're going to be getting these bumpy strikes, as you say, Will, next month. Hopefully before that time, this entire issue can be resolved.
Well, hopefully, Juliana, is resolved so people can ride their trains and not get cancellations at the train station, especially at Paddington. Now, let's see what Ofgem is doing at the moment. Ofgem has launched a review into the standing charges levied on customers by suppliers. It looks like it's a relief, but there appears to be some controversy. Is there, Juliana?
Yeah, it is controversial, and you're right, Ofgem, who is the energy regulator, they've just launched a series of consultations which I believe close at the end of January, and what they're trying to do is they're trying to look at the daily standard charge. Now, if you are living in the UK, whether or not you switch on your gas or your electric or you're on holiday, you have to pay a daily fee for the use of energy, even if you're not using it. And I believe it's jumped. It was about 40 pence per day, I believe. It's now about 83p. That's about 1,000 naira. So, you know, whether you switch on the lights or not, that's what you pay. And I believe that standard daily charge is what helps operators operate, and for people to come out to your home and check your meters, etc., etc. Now, this was not an issue before the pandemic and the energy crisis, but it's now become a significant issue because, of course, we are getting to winter months. So whether you've got a one-bedroom flat or you've got a 10-bedroom mansion, everybody across this country pays the same rate. And that's where I believe charities and the energy regulator are now asking for consultations, because, of course, we're not all in the same tax bracket. Many more people earn so much more money than, I believe, the 1.2 million people that charities predict are living in energy poverty. So Ofgem has opened up this consultation. They want households to get in touch. They want charities to get in touch to try and find a way to resolve this issue, because, of course, if you are an energy boss, then you want to look at ways to make sure that you're able to pay for your operating costs, and the daily standard fee is one of the ways that they were able to do that. I think some of the fears that regulators have is if they pull this daily energy charge away, then operators will look for other ways to rack up their earnings, and that could be with higher energy bills, which of course we don't need. It goes without saying that, you know, if you compare where we are to this time last year, things are completely different. Yes, energy prices may have come down, but a lot of that really chunky support that we were getting from the government is not available to everybody. And so there are fears as we get into the colder months that some households may not be able to cope. I think generally what we want in this country, Will, is for there to be a much more transparent way of how energy companies are making money, because if you get an energy bill in the UK, there are so many different lines within the bills. A lot of people are confused, so I think this is a matter of transparency and, of course, fairness.
Definitely, Juliana. We need fairness in terms of how energy is supplied to us, how much we pay for it, and we hope we get that soon. But earlier today we saw that surge. I was looking through the papers and saw that surge in the hot chocolate shares, but not so good for Burberry in terms of their earnings. How are investors reacting to this?
Yeah, the FTSE is not in tip-top shape. Red, red, red is the colour of the markets in London and intraday. The all-share, it's down. It's down by 0.51%. The FTSE 100, that's down by 0.25%. Will, and the FTSE 250, the domestic market, down to at 0.45%. You're right. Burberry, the luxury retailer, has actually fared pretty well over the past couple of years, but they've issued a profit warning, basically saying it's going to be very difficult for them to meet some of their targets. Their shareholders were not happy there. They're one of the biggest fallers on the blue chip index. In the currencies market at intraday, the British pound is trading down against the US dollar by 0.14%, also down to against the euro by 0.14%, and down against the Japanese yen by 0.12%. Will.
Thank you so much, Juliana, for that update. Now we go to the EU, where the European Commission has lowered its 2023 economic forecast for the EU. It expects growth to be slower than expected. Joining us with more is Deutsche Welle's correspondent Chiponda Chimbelu in Berlin. Chiponda, tell us more about the EU Commission's latest economic forecast.
Thanks for having me, Will. Well, the EU Commission expects the bloc's economy to grow 0.6% this year. So that is 2 basis points lower than it previously forecast in September. And this is the second time in a row that the European Commission has lowered the bloc's economic forecast. It blames the high cost of living, weak global demand, and tighter monetary policy. Russia's war in Ukraine continues to affect the bloc, which of course has had to seek alternatives to cheap Russian energy. And that has driven up energy prices, which have contributed to the high inflation triggered by the pandemic. And attempts to remedy that with tighter monetary policy have pushed the cost of borrowing higher. And that has put pressure on consumer spending and raised the cost of doing business here in Europe.
Where are the pain points in Europe's economy? Can you tell us?
Well, the EU forecasts that economies in 10 of 27 member states will shrink this year, and that includes Germany. Europe's biggest economy is one of the main pain points in Europe. Its economic growth is lagging behind other countries. As Europe's industrial powerhouse, Germany consumed a lot of energy, and its industry has been impacted more than other European countries by the economic fallout from the war in Ukraine. But it's not just that. Germany is also an export-dependent economy. The export of goods and services make up around half of Germany's GDP. So the weak global demand has been hurting the German economy more than it is affecting its European peers. The overall global economic outlook may need to get better for Germany's economic outlook to improve, especially the situation in China, which is its biggest trade partner. For now, the Commission is slightly more optimistic about next year. It expects the economy here in Europe to grow at a quicker pace in 2024 than this year, and it is forecasting growth to come in at 1.2%. That is 1 basis point lower than its previous forecast, but EU officials are still concerned about increasing global geopolitical tensions in the world, especially in the Middle East, where we have the Israel-Hamas war and, of course, Russia with its war in Ukraine.
Now, turning to the markets, Chip, what should we be watching?
So the European markets today are trading lower, and that is, of course, after 3 days of gains. Investors here appear to be taking a break. There are signs that China's housing crisis may be worsening, as the latest data shows that Chinese home prices fell the most in 8 years last month. Now, that is something that is putting pressure on investor sentiment. And here in Germany, the latest employment figures show that the positive trend continues in employment, but it is at a slower pace. In the third quarter of this year, the number of people in work in Germany increased 0.7% compared to the same period last year. That's obviously some good news. Investors will also be looking out for U.S. manufacturing data and unemployment benefits due later today.
Thanks, Chip, for that update. It's always good to have you. Now we'll turn our attention now to Africa and the credit industry. With rising cost of doing business in Nigeria, credit to the real sector is needed more than ever to support businesses as consumer incomes are squeezed at this time. It is for this reason Credit Registry put together the Africa Credit Expo 2023 to raise awareness for the need to support households and businesses with the right credits and avoid debt issues down the road. Let's take a listen.
If you're going to get credit to the real sector, there has to be a lot of infrastructure and amenities in place to justify the credit. For instance, the market that we're serving is large in terms of the population of Nigeria. However, in terms of the ability of manufacturers to actually be able to manufacture their goods on a competitive basis, because we allow imports into Nigeria, those things have to be addressed somewhat in order for the Nigerian manufacturer to be able to take credit, because the lenders, the banks that are going to give the credit, they want to make sure that that credit is going to perform.
Talk about access to credit for small businesses and SMEs. The SMEs, small businesses, are really what makes any economy. They're the ones that help us to employ people. And when people are employed, they're able to buy more goods and services because they have the money to do so. And they're also the ones that will be qualified for credit because they have access to an income. And when you look at that, as businesses are able to sell more, they're able to employ more in order to meet the masses that are actually trying to buy their goods. So as you can see, when we're able to give more money to small businesses, they're able to actually generate the wealth that a country needs.
Thanks for staying with us. Now, the Kenyan government declared a surprise public holiday for its citizens on November the 13th. The goal of this holiday is for its 55 million citizens to plant 2 seedlings each. The country aims to increase forest cover to 10% from 7%. The plan is to plant 15 billion trees in 10 years. Now, according to United Nations, Nigeria, on the contrary, has the highest deforestation rate in the world, with an estimated 3.7% of its forest lost every year. Olashibomi Ali Balogun, Research Associate, Financial Derivatives Company, joins us to discuss this. Shibomi, if Kenya finds it necessary to embark on this aggressive reforestation initiatives, why is Nigeria not doing the same? And if Nigeria was to introduce such an exercise, what will be the impact on the agricultural output and its environment?
Well, for one, I think we should first go around and discuss the climate or the ecosystem of the world. So global climate right now is declining, and with the way things are looking, if we don't sort of like create awareness in Nigeria, we would see more decline. And like Nigeria currently, we have started some particular states. That's the food production states. They have taken they have some initiatives going down. We have Lagos states. I think in 2021 they had some tree planting exercise. We have Kano, Borno, Bauchi, and a few other. But those are just a few states that have taken the initiative to start this. And global climate is currently on the decline. We saw during the COVID period, we saw the Amazon, the Brazil Amazon rainforest. Some parts of it got burnt, and the whole world, there was a big discussion around it towards preserving the rainforest because it spans across 9 countries and it's one of the biggest rainforests in the world. So with Nigeria, there needs to be more awareness towards the global ecosystem and preserving it. We have seen these particular states, they've come in, they've done that, they've done this, but we have not really seen any much impact on how this is preserving the ecosystem in Nigeria. Well, when we look at the agricultural space, it's sort of like the trees and the deforestation. When you look at deforestation sort of like it leads to it reduces the agricultural products. Once you remove the trees or you fell trees from the forest, it emits the carbon which has been which the trees were keeping down. The trees sort of like serve as a protector for the ecosystem. So once they emit those carbon in, they take it, they preserve them and sort of like dissipate them into they dissipate them slowly. So this sort of like helps the agricultural. It helps prevent less production.
Okay.
Once we have more production of agricultural products, and we preserving more trees, helping the ecosystem go more better. There are so many advantages to it.
Okay, so
one, we can look at how the trees help with water quality.
Shubhami, let's just quickly go to what the UN has for this deforestation. It has a very ambitious goal to halt deforestation by 2030. I would like to know what this impacts, if this initiative is even achieved, what is the impact in terms of the global price of lumber?
Well, I think, okay, for one, I should start with how Kenya. Let's look at Kenya first. They banned felling of trees in Kenya for 6 years, and there was a recent policy which which they lifted the ban, but then it was the ban was lifted for them to cut down mature trees and trees that were decaying. So during that period, during the 6-year period, we saw how how lumber was very, very expensive. They had to buy illegal logging. They had to like skate around for different lumber just so they can meet the demand. And the supply that they got wasn't even up to what they needed. So globally, when we look at achieving this, there has to be some sort of balance. There has to be policies guiding felling of trees. We can look, when we look at it economically, we can say there will be an increase in the price of lumber globally. Yes, but when we look at it ecologically, we also need to preserve this. So if they strike a balance on trees that are decayed, trees that are mature or over mature, they can cut those or fell those. But when we look at trees that actually contribute to the ecosystem of the world, I think are trees that regenerate. So there are trees that are sort of like they are beside the water side, and they help to control and the way water goes and impacts flooding. So trees like that should be left alone. So it takes a lot of initiative, continuous processes, and a lot of maintenance to keep the balance in place. So there would be an increase in the price of lumber globally, but then it is very important that there has to be a balance.
Thank you so much, Olashubomi Ali Balogun, Research Associate, Federal Financial Derivatives Company, for sharing your perspective on Business Incorporated.
Thank you.
Now we move on to other stories now, where the International Monetary Fund will expand its financing to Kenya by $938 million to boost the country's reserves before a Eurobond repayment due in June. If approved by the IMF, Kenya will have access to a total of $3.88 billion, which would bring its total funding under the existing extended fund facility and extended credit facility arrangements to $4.43 billion. Yields on Kenya's $2 billion Eurobond due June 2024 fell 56 basis points to 15.23% as investors reacted to this news. Now, the money will help the government address its precarious public finances while supporting the shilling, Africa's 6th worst performing currency. Now, the Zimbabwe Stock Exchange says companies listed on the exchange can choose to prepare their financial statements in U.S. dollars. This is due to the U.S. dollar's prominent role in the country's economy. Now, this switch, however, would require approval from the directors and shareholders of the companies. Recently, Zimbabwe extended the use of the U.S. dollar as legal tender until 2030, and the authorities believe that this move will provide policy certainty to the market, which has been disrupted by changes to currency regulations in the past. Now in South Africa, the British bank Standard Chartered SCB will pay almost 43 million rands admission of guilt settlement to the Competition Commission for being part of local and international banks accused of manipulating the rand-dollar exchange rate. The settlement brings to an end an 8-year-long dispute over allegations that the SCB colluded with other banks to manipulate the rand-US dollar exchange rate. Efficient Group's chief economist, Dawie Rudd, believes that this will not have a long-term effect on the South African economy. Let's take a listen.
It is extremely difficult to prove that a currency trader was involved in currency price manipulation. These sort of things happen all the time in the financial markets, and actually proving that there was some kind of meddling or a manipulation of certain prices are extremely difficult to do. In this specific case, this is not really a fine for Chartered or Standard and Chartered, but this is more a settlement. And I think what one should read into this is that Standard and Chartered paid money for the problem to go away. I don't think it should be seen as a fine. And it's also important to note that although there could have been some manipulation in the short term of the exchange rate of the rand, as an example, I don't think it will have a long-term effect on the South African economy. The market is just far too big to have one or two banks, or even a couple of banks, to permanently influence the exchange rate of a currency in one direction or the other. And if they could do that, that specific manipulation will have to be reversed in the other direction soon. So the net effect on prices of the exchange rate, for example, is unlikely to have a significant impact on the financial markets or on the South African economy over time.
And with that story, we bring to an end this edition of Business Incorporated, live from Channels Television. I am Will Ibang. Thanks for watching, and we'll see you tomorrow.